Hi, I'm Ed Tomlinson, investment consultant for Aon. 2019 was an impressive year for KiwiSaver returns. These results were led by share markets, with the US returning 31% and the NZ All Shares providing a strong 30%. There were some even more impressive results available, with the US tech sector achieving a 50% return and the share price of the world's largest company, Apple, doubling. So why did markets do so well last year? The returns are best explained by falling interest rates around the world. In fact, 70% of central banks have reduced their interest rates. To put that into perspective, this level of activity is really only surpassed by the action taken during the GFC. Lower interest rates have provided growth assets with tremendous support. This support was both technical and demand driven. Technical means that investments with future income are more valuable when interest rates are low. This effect has been accelerated by investor demand as they focus towards riskier asset classes, pushing their prices up. The December quarter provided a change of pace. All the support provided by central banks and a US-China trade deal have improved sentiment. This first agreement paused a damaging escalation in trade tariffs and has provided a great start to 2020. So how did the Aon KiwiSaver Scheme do during 2019? With pretty much every asset class making money, all of our investment managers did really well. Those with higher exposure to shares, like the Milford Active Growth Fund, led the pack. The Russell LifePoints 2055 fund also had a high exposure to shares and achieved 24% across 2019. A number of our members have asked us if these returns can continue. Well, we think this year is likely to provide much lower returns, and we expect volatility due to a few key challenges. Let's go through these challenges. Number one, unemployment is already very low. US unemployment is at a 50-year low of 3.5%. And in New Zealand, the Reserve Bank believes unemployment is near its lowest sustainable level. It seems challenging for unemployment to go much lower, and this means economic growth probably needs to come from other sources. Number two, share prices are high compared to corporate earnings. Markets now look expensive. The US is at close to its highest valuation levels in the past 2 decades. New Zealand's share price to earnings ratios are currently 40% higher than their 10-year average. Number three, it's now a US election year, and Donald Trump's tweets have significant impact on global sentiment. On one hand, his expansionary stance is highly supported for growth. On the other, his America First agenda could lead to renewed escalation of trade tensions. Number four, China. New Zealand's largest trading partner is having a tough time dealing with the coronavirus. Taking this into account, it seems that China will experience at least a slight slowdown across the first part of this year. Amongst the challenges for New Zealand is a likely reduction in Chinese tourists. How bad the economic impact will be remains a very big unknown, and the share market falls in late February highlight this risk. And finally, number five, low interest rates. Having aggressively reduced interest rates in 2019, the Reserve Bank of New Zealand has much less ammunition to protect the economy from weakness. With the Reserve Bank now on pause, Prime Minister Ardern announced a $12 billion fund to spend on infrastructure. While the timing of this new spending is uncertain, the overall impact should be positive for New Zealand's outlook and help shield the domestic economy from global events. For now, our funds are doing well, but markets will change at some stage. Remember, KiwiSaver is a long-term investment for your retirement, and achieving a good return requires a long time horizon and exposure to some risk. What you need to do is make sure that you're in the right fund for the level of risk you are prepared to take. Our online risk profiler can help you understand your attitude to risk and help you determine which fund might be right for you. You can find this really useful tool on our website, aonkiwisaver.co.nz.